Good morning. Welcome to Forex In Four. Today is Friday, August 19th, 2011. This morning I'm saying that the global rout continues. And, if we look at what's going on in the markets today, you can see that stock markets are just getting hammered, both in Asia, Europe, and stock futures here in the U.S. But it looks like, as the U.S. is starting to wake up and people are starting to hit the screens, we're coming back a little bit. And I think that, maybe some of the selling's a little bit overdone, and there's a possibility that we could see, I don't want to call it just a reversal, but maybe a mitigation of market selling that we've seen over the past 2 weeks. Yesterday, markets were down. Dow, I think, was down around 400 points. All right, and that leads to the overnight where we see in Asian markets they're down another 3 to 5% again, and now we've got European markets selling off. All right, there's concern over there about what's going on with European banks and their funding, and this is sort of analogous to 2008 here in the U.S. when we had the problem with the banking system here. Well, people are saying, well, it's not as bad over there in Europe and as people think, and it's sort of it's more of just a crisis of confidence at this point. So it's going to be interesting to see what's happening. But we're taking a look here at Euro USD, and I put it on the 5-minute chart because I just wanted to show you real quick. All right, you can see that since markets opened this morning, Euro's bounced higher. All right, we're going to pull it back out a little bit, and we've talked about this trading range that Euro's been in, for the past, week or so. All right, let me pull it out just a little bit further. Let's get on the 2 hour. Basically, 145 to 141 has been the range. Now, people are saying, God, if all these problems are emanating from Europe and people are concerned about the banking system and what's going on over there, why isn't the euro lower? Well, because the problem is that, euro is one major currency. All right, the other one's U.S. dollar, and people aren't happy with the U.S. dollar either. All right, we know about all the mess we went through over the last month with the S&P downgrade, the debt ceiling debate, all these other things. Well, now we've got this big meeting in Jackson Hole coming up. It's the Fed meeting. And I thought Bernanke was supposed to speak or release something today, but I don't know if that's the case or not. But basically what's happening is that they're going to be coming out next week and talking about all the different things going on, and some people are saying that he's going to use that platform to announce QE3, basically to launch QE3, which is going to be the third round of quantitative easing that we're going to see from the Fed. So what that's going to do is that's going to weaken the dollar at that point, which means things like euro should potentially go higher. But we've got this situation going on where they're just putting up these band-aids after band-aids, and we have no fiscal leadership here in the U.S., and that's really a problem. All right, because the Fed's doing everything they can through monetary policy, but if you don't get help on the fiscal side of the ledger, there's only so much you can do. I mean, at a certain point, you're sort of pushing on a string, is what they call it. So it hasn't been helpful at all. So, today's the type of day where we actually have no economic data due out in the U.S. So, there's no hope for that magic bullet data point that's going to have people say, hey, wait a second, things look pretty good here, and yeah, the data's been bad, but this is a ray of hope. We don't have that today. But some of the things from yesterday, gosh, the Philly Fed number that came out. I do these videos earlier in the morning, but by the time the Philly Fed number came out, man, that was a disaster. They were expecting a reading of 2, and they got a negative 30, which I forget when the last time they've seen that was, but it's been a very, very long time. All right, so that's just an awful, awful number, and that just shows you that people are concerned about the global economy and the U.S. economy, and are we going into double-dip recession? All right, are we falling back into recession? Have we ever actually left recession? All right, these are all questions people are starting to ask now, and as the markets sort of get move at these frantic paces, all right, you don't have the time that you used to have to be able to figure these things out. It's sort of like, boom, let's get it, let's sell now, ask questions later. So, I mentioned yesterday about gold, man. Wow, another big pop for gold. Show you that. All right, gold, new all-time nominal high, 1875. Wow. All right, and I talked yesterday about a parabolic move, and we actually featured gold on the chart of the day. All right, this still is not the parabolic move I'm talking about. All right, so I mean, once you start getting up to certain levels, all right, and if QE3 gets launched next week, all right, I think we're going to see 2,000 gold. All right, $2,000 gold. But that's going to be when you start to see these parabolic moves, because all of a sudden at that point a 1% move in gold is roughly $200, so these things can go sort of haywire. So seeing gold just inching forward and keeps moving higher and higher. Take a look at oil. Oil's pulled back. I think we hit a 79 handle earlier in the day, just briefly, and now we're just we're back up just above 80. So it looks like perhaps there's a little bit of an oversold bounce here that we're getting, but I'm not certain that people want to go into the weekend necessarily long risk. But we can see what's happening here with some of the risk currencies. Let's take a look at Aussie real quick. All right, Aussie's been well. Let's look at this on the I don't know, the old 15-minute chart here. Okay, you can see Aussie's been down and there's been a lot of selling, but we're getting a bounce here as well today. So this actually could be a decent time for, I don't want to say decent time, but we could see a bounce back in equities today from what the currency market's been saying, because the currency market's actually been rather tame, compared to these wild swings we've been seeing in equities. So Aussie's lower, but it's bouncing back today. We can look at, I want to look at Kiwi here. All right, Kiwi. So you can see all these moves happening. All right, and it looks like there's going to be some dollar selling here to start the day. One of the ones I want to show you real quick is we can look at Euro Swissy. Okay, Euro Swissy's sort of sitting in that range. It got as high as 115 earlier in the week, and it looks to be putting in a little bit of a bottom here at about 112.50. Let's look at dollar Swissy real quick. Okay, dollar Swissy, you can see that dollar is actually selling off a little bit versus Swiss franc. So that means that franc is strengthening a little bit versus dollar, so we have dollar weakness is what's starting drive the markets today. But now there's a rumor out there that perhaps the Swiss National Bank is going to take additional actions this weekend, and one of the things being mentioned is potentially a deposit tax, meaning you've had all this money rushing to Switzerland on the flight to safety, which has caused the Swiss franc to strengthen more than the Swiss National Bank wants to happen. All right, that hurts their exports. They lowered interest rates, they opened up these swap lines, they did all these things trying to combat the rise in the price of the strength of the franc. And what they're saying they may do now is place a tax on people who want to deposit their money in Switzerland for the safety. So it's sort of like, instead of them paying you interest, you're paying them interest. All right, so hopefully that's going to deter some of the money flows, and people are saying that they could see that this weekend. All right, that would potentially cause the franc to weaken, so we may see that happen. We got dollar yen. We can see dollar starting to weaken, and I wonder, let's take a quick peek here, dollar yen. All right, we're still sitting above that magic 76.25 number, which is that all-time high for yen versus dollar. And people are saying that the intervention, we may see it again at 75. I think they're going to fight this down from about the 76 level, maybe down to 75. But if it breaks 76.25, I mean, it could get down there very quickly. So I would think at that juncture we would see some sort of intervention. News overnight, there wasn't really much happening. German producer prices came in a little bit higher than expected. And well, actually a lot higher than expected. I'm sorry, 5.8% versus 5.3%. So we got an inflation problem in Germany, which means that the ECB is going to be on alert, but they're still working through this debt crisis. So it's going to be hard for them to go ahead and do something with interest rates there to help out Germany's inflation. Okay, if they're seeing it. At the same time, deal with the crisis of the sovereign debt. So interesting scenario. Public finances in the UK also shrank a little bit. Just take a quick peek at the pound. Pound's moving a bit higher as well, as people are looking for these good stories that come out, and they're trying to find justifications for places to park their money. And people at least are looking at the UK and saying, all right, well, at least they're trying to be a little bit fiscally responsible. So perhaps it's not a bad place to be. But right now, doesn't look pretty out there. Morning starting off with the futures way lower. We saw oil lower, but things are starting to bounce back off the lows. So if we can get back to positive today, I think that's going to be a pretty good day going into the weekend. So that's what I've got for today, folks. Good trading to all.